As we enter into 2024, in addition to the historical trends that would dictate we'll see a pullback in the S&P 500 of at least 5%, there are a lot of other factors that you need to keep in mind. Even though the Federal Reserve has more or less announced that they're done with the rate tightening cycle and they'll be cutting rates in the next year, this isn't necessarily a good thing. Every time in the past that the Federal Reserve has announced that they've avoided a recession and that they're going to cut rates, something happens that causes the stock market to sell off epically. For example, in 2008, Ben Bernanke went in front of Congress and said that the Lehman Brothers crisis had been taken care of and that there would be no recession. In 2009, by its bottom in March, the S&P 500 had sold off more than 55%, and the U.S. economy was about to enter the worst recession it had ever seen. In December of 2023, Federal Reserve Chairman Jerome Powell came out and said that they had fought inflation and won, that the economy was strong and the job market was strong. Does this sound familiar? Now, maybe this time will be different. Maybe the Fed will execute a soft landing, but it's important to remember that's actually never happened before. There are experts that will refer to 1995 as a soft landing, but the economic conditions were extraordinarily different. In addition to anything that's affecting the United States specifically, it's important to remember that on the global scale, Europe is in a recession, and that China is seeing dire consequences to its overspending, and its economy is extraordinarily weak. China is responsible for a lot of the demand in the world, and without their economy being strong, they're not buying. And speaking of China, in mid-January, Taiwan is having its next presidential election, and if the wrong party wins, it's possible China could try to invade or influence Taiwan's economy by causing a blockade. If China causes any kind of action like that, the United States virtually has to step in. And a geopolitical concern like that is not good for the stock market. Now, while some asset classes may actually see a bump when it comes to things like that, like gold or defense stocks, the majority of the market would sell off. However, what if none of these bearish things happen? What if everything is good, we're headed into a new bull market, and the S&P 500 is headed for higher highs? This is why it's important for me to always invest in stages. I don't make a bet on what's going to happen as we head into the future. Instead, I buy in stages as my investments sell off, and I take profits in stages as my investments grow larger and larger. This way, I never have to worry about my personal narrative affecting whether or not I'll be successful for the long term. Want to learn more? Check out all the videos that I have on my channel. Follow me on X at GetErked. Visit my website, geterked.com, or my Substack, geterked.substack.com. If you liked my video, please hit like and subscribe. It really does help the channel out. Thank you for watching, and I'll see you in the next video.